Coming up on the SBS On the Money podcast, our special CEO series. Alister Haigh from Haigh's, as the fourth generation family business, appoints a non-family member as CEO for the first time in its 110-year history. Plus, in the markets, US shares closing at a record. All the details and more next. Hi everyone, it is Friday the 4th of July 2025. Welcome to the SBS On the Money podcast, where we're giving you consumer finance and markets news you can use without the fluff. The Australian share market today closing higher, but only just by 0.08%, 8,603 points. We'll have the details with Omkar Joshi from Opal Capital Management in a few moments, including a closer look at the US economy as shares there hit a record. But first, for the first time in 110 years, a non-family member has been appointed CEO of an iconic fourth-generation South Australian family business. Alister Haigh, the great-grandson of Alfred, is stepping down as CEO of Haigh's Chocolates after 30 years in the role. He'll be handing over to its Chief Operating Officer, Peter Millard, because, he says, the younger generation is a little inexperienced as it manages external challenges like rising input costs. So I wanted to talk to him about those rising input costs, what it means for chocolate prices, and the impact international tariff policy is having on the business. Here's my interview with Haigh's Chocolates CEO, Alister Haigh. Alister, so you've been CEO for 30 years and involved in the business, obviously, pretty much ever. Why retire now? Why give up that CEO role now?
I'm reaching a significant birthday, and as you said, 30 years, I think that's a pretty good innings. So we've got some very capable people working for us now, and our Chief Operating Officer, Peter Millard, who's taking over, has been with us 19 years. So we're very confident that he'll lead the company well into the future.
Why someone from outside the family?
Well, the next generation's a bit young and inexperienced at the moment. So I guess the only one similar age to myself is my brother Simon, and he's very happy to look after the finances, but not the company in general.
Does it change anything with the running of the business?
Well, no, I mean that's probably one of the reasons why we are making this decision is because we're pretty confident that it won't really change that. Peter's been with us for 19 years now, and so he understands the sort of values and the direction that the board wants the company to go in, and the shareholders. So we're all very confident that it'll continue as it has been in the past.
I think it's fair to say that Haigh's is an iconic Australian business, not just a South Australian business, over 100 years. Given your 30 years as CEO, what do you rank as your highlights?
I guess there's many, but probably when we first opened our first store in Sydney was one of the major highlights, sort of in that 30 years. But it's just the way the company has grown over that time, and we've got now 900 people working for us. So it's that survived challenges, and its reputation has grown, as you said, nationally. So it's a combination of things.
Growing a business is all about innovation, right? So how does a chocolate company innovate, and how has the market or consumer tastes changed in your time?
Look, we have to innovate every season. So our range at Christmas and Easter is different every year. More so in the packaging rather than the actual products, but we always introduce new products right through the year. So we sort of follow trends and we get feedback from customers as well to try new flavors. So there are a lot of new flavors now that weren't around 30 years ago, let alone 50 years ago, but there are some tried and true ones as well. The sort of dark apricot fruits that my great grandfather invented was there. The caramels that he bought the recipes from in 1915 are still pretty well the same. So some things haven't changed, but some have.
Do you know what has changed? Chocolate prices, right? We've been talking about it for the past year or so in particular. I think the ABS anyway said that cocoa prices slash chocolate prices, consumer prices are up around 6% year on year, the latest numbers. What are you seeing and where do you see chocolate prices going, whether it be for the consumer or those input prices for your business?
Look, the price of cocoa, we're paying roughly triple for our raw cocoa beans that we were 12, 18 months ago. So that's had a huge spike, but I've seen huge spikes before over my time, and it's like any commodity, what goes up comes down. So I'm pretty confident that the price of cocoa will come back. Probably not to the levels it was, but it'll come back enough so that we can retain our margin that we were used to. But so it's an agricultural product, and so it's subject to fluctuations.
And what does it mean for the consumer? Have you had to pass on some of those costs to shoppers?
Look, we have to a degree, nowhere near what the costs of our raw materials have increased, but we've had a few increases, but we've kept that to annually, and we just, as I said, confident that the prices or the cost will come back on that. I'm not that's sure about energy prices dropping back, but at least with cocoa, I am.
Is it fair then to say that energy prices are a bigger concern for you?
Well, they're not in our company. No, we're not that sort of mechanized. I mean, all our facilities have to be temperature controlled. So yes, they use energy, but we're not an energy hungry company. So it has lesser effect than cocoa prices or the cost of labour.
Okay, two final questions. One of the key global issues at the moment is that of US tariff policy. Does that influence the way you operate or do business? And what are your thoughts?
Probably the most direct is what effect it has on our exchange rates, because cocoa in particular, as well as a lot of our packaging, is in foreign currencies. So it depends on how strong the dollar is that there's an effect. I don't think supply is going to matter or change that much. I haven't seen where they're going to put tariffs on cocoa beans or anything which could divert supply to us. But yeah, I can't see that supply of raw materials affecting too much. Maybe any packaging that we get from overseas, if it can't go into America because of tariffs, it might be sort of cheaper for us because they want to move it. But it's more the exchange rate that will have an effect on us.
And final question, and putting you on the spot, I love asking any CEO this kind of question so we can learn, right? Over the past 30 years, what do you think is the biggest lesson that you've learned as a leader?
The strength and the courage to say no to things. So there's a lot of things that look very appealing, but you think, oh yeah, that'd be great. But you've got to go back to your sort of plan and stick to the plan and say no to things that are not in your plan.
It's Alister Haigh there, the outgoing CEO of Haig's Chocolates. Now, Market Day on the SBS On The Money podcast. Another relatively quiet day for the Australian share market ahead of the public holiday in the US tonight. The S&P ASX 200 up just 0.08% to 8,603. It does follow a pretty successful week for the index, though, up around 1% over the past 5 trading sessions. For more on that and to explain why the US market hit a record overnight, I spoke with Omkar Joshi, the Chief Investment Officer at Opal Capital Management. Omkar, the Australian share market had a good week this week. Flat again today, though, but what's generally been driving it?
I think the main driver behind the rally that we've seen is really just the fact that the macro uncertainty and volatility seems to have settled down for now, and that's just meant that the market has kept grinding higher slowly but surely.
We delve into the US for a bit, though, because we've seen record highs in some parts of the US market, the S&P 500 and the NASDAQ overnight. Some great jobs numbers overnight too, which means that US interest rate cut expectations may have been pushed out a bit further. Yet we've also got Donald Trump's new tax bill passing, and there's the ongoing ballooning US debt. So as an investor, how do you feel about the US economy, and how concerned are you about this ballooning debt?
So I think in terms of the US economy at the moment, the main thing to remember is that it's still humming pretty nicely. So the macro is still pretty good. There is a lot of uncertainty around what happens with tariffs, what happens with debt, what happens with taxes. But the reality is at the moment, all the data is still quite strong. And I think that's why we're seeing the market continuing to chug along, in that we haven't actually seen anything go wrong just yet. And yesterday's data was another example of that, where everything is still fine at the moment. There is obviously a lot of uncertainty about what happens next. What happens next week? You've got the 90-day pause ending on tariffs. What does Donald Trump do after that? Does he increase tariffs materially? Does he push them out further? Does he reduce them? There's a lot of uncertainty. We don't know the answer to any of that right now. And I don't think even the administration really knows exactly what's going to happen next. And so there is a lot of uncertainty on the horizon, but at the moment, the macro is still quite good. And I think that's why markets are trading where they are. In terms of the debt, look, the US has had a lot of debt. And so I don't think that in itself is a short-term issue as such. Longer term, it becomes a problem around how do you deal with the debt? How do they get out of it eventually? But I think for the near term, at least for the immediate future, it's really not a big problem as such.
Okay, what about the Australian economy? ABS data out today showed that household spending rose a little bit more than expected. Any implications for interest rates when the RBA meets to discuss them next week? What's the market thinking?
So at the moment, the market's still pricing in a rate cut for next week. I think there probably will be a rate cut next week as well. And ultimately, the fact that inflation is coming off is really the key driver for what happens around rates. And that's really what the RBA has been and tends to be more focused on, as opposed to necessarily a little bit of an increase in household spending for now.
And finally, what are you telling your clients at the moment, and where are the opportunities for investors?
So I think at the moment, it's important to be nimble, given that there is a fair bit of macro uncertainty. So while macro conditions are still good, it can change pretty quickly. And we've seen that already with Liberation Day in April and just how quickly the market can price in different outcomes. So I think the main thing is to stay nimble, but at the same time, focusing on good quality companies and really looking for the opportunities from that perspective, because even in a rocky or a difficult or uncertain environment, good quality names and names that have got something going for it are always going to do better rather than necessarily looking at the speculative names.
That is Omkar Joshi there from Opal Capital Management. That wraps up the SBS on the Money podcast for the week. Don't forget, if you do enjoy it, to give it a rating and a review on Apple Podcasts and Spotify, and to click that subscribe button. See you next week. This SBS on the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.